Welcome to Trading Lounge and the US indices and stocks for the 28th of January. Yesterday we spoke about a larger top being in place here and a couple of ideas that we were looking at. I don't need to go into that again right now, so I'm just going to drill in, but what we talked about yesterday is extremely important. So let's drill into the 1 day area here. So a little bit sort of confusing here, but we've got wave 3 here, wave 4 here, and we've got wave 5. Well, wave 5 can be in place now. We also could view the market further to the upside, with wave 1 being here and wave 2 being here, but we won't go into that at the moment. We'll just stay with our count. Our wave 5 here hadn't finished off really nicely at this stage, but yeah, let's go in and take a closer look from wave 4 up to wave 5. So with wave 3, wave 4, we had 1 and 2 here, and then we counted 1, 2, 3, 4, 5 here for the third wave. Wave 4 was rather sharp and simple, but that was okay because yesterday we talked about wave 2 being quite complex. The time it took to complete wave 2 in comparison to wave 1 there, the guideline of alternation between wave 2 and wave 4, normally we'd see it the other way around. We'd normally see wave 2 sharp and wave 4 more complicated, but in this case it was the other way around. So it's just the guideline of alternation, really alternating structures, simple, complex, or more complex. And then the move up through here. To be honest, I was expecting it to move up a little bit higher, but that's not the case. So we're looking at it here. This is where we kind of left off, looking for wave 5 to push up a bit higher, but say things just don't always start and finish the way that you think that they would. They will. Another market could be drag them around. It could even be, you know, the bonds and so on have been putting pressure on stocks as well. So yeah, look, there can be a top in place there. And the thing here now is that this move down through here appears impulsive, and what I mean by that is 5 waves. So we don't have to sort of panic just yet, but we will have to, you know, cover our situation in stock. So we'd be looking for an ABC correction here, and then we'd see further down from this point. Now, let's just say that if the market was going to go further down at some point, it would test this and then go further down. If we were going to be bullish again, then we need to look at taking everything step by step, and as I talked about yesterday, working from a conservative level and then just building up. So what I mentioned yesterday is once that top's in place, then we can just put a signal above that and we can go long again. But of course we can bring it down here, and we may be able to even bring it down here further. We just really need to figure out if yeah, what we've got here. But so far, what we've got from the top here, we've got this down here as 5 waves here. Now, I know that doesn't count very nicely as 5 waves going up here, but it is the top on the cash market, on the S&P as well. And on the S&P, it also looks much the same. But when you have a look at it on the physical market, let me just bring that up for you. If I've got that there somewhere, let me just check. Okay, so from this is just the S&P, by the way, but you can see here that we've got 1 and 2 and 3 and 4 and 5 having a top in here. Okay, so that's done and dusted. And you can also see here too, we've got wave 1 and 2 here, nice strong third wave here. Now the fourth wave could be an A and a B and a C wave to this point, or we can have wave 4 here, and we've got wave 1 and 2 and going down for 3, 4 and 5, finishing a bit lower. However, whichever way we want to look at it, that's 5 waves to the top, and that's the first 5 waves down. Now that could be wave A of a larger correction, or it can be wave 1 of a deeper move down as the top being in play. So let's just dive in. little bit further. Where are we? Yeah, so I thought it may be possible we could look at this as an A wave, a B wave, and a C wave here for wave 4, and then go up for wave 5, but I really don't think that's the case. So we're looking at this as 5 waves down here, and then we'll look at this as an ABC pattern here, and then we can go short based on that low. But let's just go to maybe the 15-minute chart could do the trick. Right, okay, just a little bit of work to do here. So I haven't had time to drill in to see. I mean, if that's wave 4, then that'll be 1 and 2 and 3 here and 4 and 5 here. But otherwise, wave 4 can also sit just here, and then wave 5 will just sit on the next low here. But it doesn't really matter for the time being anyway, because we need to allow it to play out. But let's just say that we get a wave 4 here and a wave 5 here. Then that's going to leave us with, just mapping this out, I'll just take it to the 13,000, but you might have to drop it a little bit lower. And these are just flags to swim between, not a big deal, but that's where we're sort of heading back up to. So that also equals the sort of wave 4 of one lesser degree, but that's where all the supply is there. So we can look at this in terms of well, probably in the A wave, the B wave, and the C wave here, like that, something of like that, and then we'll be heading down further from that point. So I can turn the box green here because we could short in that. Because we've got a nice 5 waves down from the top, then we can short that. And I've just got to work out how to do that. Can't see it that quick, new platform, but we can just take that low there and the second low here. That's one way to do it, or you can just short in that space there. Of course, you'll need to manage that. Put it in that box there, and the idea is to build in here. Now the thing here let's just I mean, all of this can be the A wave, then a B wave, and then a C wave down here, and that's it, right? So what we need to do once we're under here, once we get a 5 waves under here, once again we need to see a corrective move here, and then we can look to short again through here after we get 5 waves in this leg here. Yeah. Then anything below that, we know we're into a bigger picture at that point. But we need to get past that. I mean, that's just the reality of it. We have to get past that to be more bearish. Otherwise, that can move back up from that point. So that's the point that you need to look after your stop. So it would probably be a good idea to take a percentage at this point here, and then also understand that from wherever that top is to that low there, wherever that may be, then you'll just need to work out your 61.8% is there. So that's, and I'm just basing that off group 2 down below here. So that's where it is here. So in a way, you don't really want the 13,100 to become the support. So you would need to clear your positions out from that point. But at the same time, then the market can come down again and you'll need to build in short here again. It's never easy when you've got wave 1 here, wave 2 here, and this may be wave 3, or it may be wave 1 here, wave 2 here, and then wave 1 of a smaller degree and wave 2 of a smaller degree, and then moving down further at that point into a larger wave 3. Okay, just shooting the breeze there a little bit, and let's check on the S&P. Is that there? Okay, that's there. Now the S&P, I had it as a slightly different count, but as I've mentioned once or twice, that one of these counts is right and one of them's wrong. So in this instance here, I've had this as wave 4 here, then 1 and 2 and 3 and 4, and going up for wave 5. So we'll take a look at that. On our website, we've got more of a complicated count with those charts, S&P charts on our website. So in a nutshell, just here, I'm not going to go into it here, but we can have this as wave C top coming into play here for a much more complicated thing going on, which I'm just not going to get into here. So is the Nasdaq right, or is the S&P right in having a wave 4 here and then we're moving up? That's what we need to move. That's what we need to understand. And if you're unsure, then you can just stand aside and we can pick it up from that point. So once we know, rather. So in this case here, from wave 2 low here, looking at this is all wave 3 up here, then this is the 38.2% retracement where it is here, and we're there already. So it's probably not the case. And that means that, same with the Nasdaq, we'll have this down here as 5 waves, then we'll have a rally, and then we'll come down further. So we'll be pushing down probably beyond the 38.2% retracement level, which in fact then will make this count here wrong. Okay, but we'll just go in and play with it for a second. So we were looking from wave 4 here, we're looking for 1, 2, 3, 4, 5 up here. That was the high here, and as I showed you on the cash market, that counts up nicely as 5 waves. But this is giving us 5 waves to the downside. This is the 38.2% retracement already. So we're sitting in this little trend channel, which I've just taken from the top here and here. They're okay until they're not. So wave 4 normally breaks the trend channel of its previous trend, so that's okay to break that for this, in this instance, for this wave 4. But we'll just see how this plays out here. I would say that though, this is also group 2 here, minor group 2, 65, 72 and 80. If the 72 here became the retested resistance here, that means moving through here and then rejecting it here. So the rejection is this move here. Then we know that this is wrong here, and we'll start looking at a top here. But in either case, we've got this 5 waves down here, so that's what we need to look at. And I could probably just cut through to, that's the hourly chart. So in this case here, we're looking at 1 and 2 and 3 and 4 and 5 coming down from wave A or wave 1. And even though you also have to remember too that, you know, when, I mean, so it doesn't look like a 5 wave top here, does it? You know, like 5 waves up. But on the tick chart, you can count that. We'll have a look at that. But on that S&P count here, you can see 1, 2, 3, 4, 5 here for that. So it's quite clear here, just not clear on the futures market. So, but yeah, it's a bit haunting when something comes down so quickly, but that's normally the personality of a wave A, by the way. And then when we get wave B coming into play, then if it's going to be a wave C here, what we'll see, it'll be on more, I'm exaggerating, but be comparing this here to wave C to wave A here. If wave C is on more of an angle here, or the pattern's on more of an angle, then you'll know it's wave C. If it's just as sharp as wave A, then you know that you've got a bigger bearish picture occurring, which is just natural, of course. But yeah, wave C is more of a lazy sort of thing, you know. So we'll see about that movement there. But when this lands here, probably either on the 700 or the 720 or 710, somewhere in that space, then you can look at the 61.8%. But I can tell you here that this is all the, the supply here, and that's the closest, largest number. So it's probably likely just to come back up and hit that and then move down from that point. I'll just see what we've got on the 15-minute chart or the tick chart. So I've drawn it out here as 1, 2, 3, 4. I'm just not sure about this. I haven't pulled it apart enough just yet. I just don't know if there's one more in here and then this one here. But once again, we'll look for the A wave, the B wave, and the C wave coming up here to this level here, which will be the excuse me, will be the 800. And that can be wave 2 or it can be wave B here. That's what we've got to figure out. But in the meantime, if you wanted to short, then you can take the low wherever that low is here. I'll just put it here and just draw that line across here and short from that point based on the low of wave B here and wave A over here and wave C here. And normally if it's the wave 2, it should be simple and it should be sharp and quick and swift. Okay, if it's going to be a wave B, then it could be a little bit more laborious and you know, sort of become big, you know, just as big as this one here in terms of time, but otherwise wave 2s will be sharp and swift. So anyway, there's, based on that being the high, we've got 5 waves down here, so there's a shorting opportunity here. How far it gets us, I really don't know, but because we get 5 here, that means we get another 5 over here. So then it becomes a management issue over here. So when we get to the bottom of the 5 waves over here, if I said before, let's just see one, and you'll kind of know because of that the speed of things, as I've mentioned before. Well, if it comes down this far, then it's come down too far for the wave 4 here. So then it's something else at that point. And it's also the angle of it comes down as well. So if this is what it is here, that's our reference point here. So if it comes down in a more lazy way, then it'll be probably a correction. But if it comes down just as sharp, then you know that it's going to be a bigger bearish picture. And then you'll need to figure out, then knowing that, that helps you make your decision on should you take a percentage at the bottom here, or should you not? Because if it comes down really sharp, there's no point, is it, to do that? You might as well just kind of suck it up and you know, find the next place to add to as well. But you'll need to keep your stops out of the way, and you do not want to overtrade, otherwise you'll be flicked out. So in this case, you'll need to know where your sort of 62% retracement level is, or even your 78 or even 80% you need to handle, you know, in case it pulls back 78.6% or something. But yeah, it's quite difficult. In this case, less is more when you go to short. Okay. Okay, I'm just going to leave it at that. So what we do need to do is look at stocks. So this one here is Amazon, and this is the one that tells me that we're still in a bullish market. Okay. Because this move down through here is in 3 waves. So that tells me this, whatever happens beyond this is corrective. And we haven't taken out this top yet. So if this is corrective here, then we still haven't taken out that top. I've got it had it as a triangle, an A, B, C, D, and E, but it could be looked at slightly differently as well, especially when you look at Adobe and a few others. But in this instance, we'd been looking at this as 1 and 2 and 3 and 4, and have to take that new spike here in a 5-wave structure up here as wave 5 of 1. So in this case, we'd look for an A wave, a B wave, and a C wave back down to the 3,200. But we have to remember this has been going sideways while a lot of other stocks have been pumping to the upside. So it means that the other stocks can go down while this makes new highs. So we just would need to kind of be mindful of everything. But we'll just see how we go with this, and we'll need to move the stop on this. Let me just... not that one, this one, so it's Amazon 323. So this will play out. Let me just see this here. So let's just assume for a moment that's the A wave, the B wave, and then 1 and 2. So we'll probably end up seeing this as a 3rd wave dropping into here, and then this 4th wave here. So what we need to do, we need to wait for that to play out here. Okay, so what we'll do, because we don't want to get out unless this comes down from that point there. So we can put the stop at 31.66. Which is just above our entry at 31.60, unfortunately, but we'll yeah, so that's what we'll do. So you have to wait for that low, the first low below the level to come into play here. Allow it to come in, and then put the stop under it wherever it is. And then if that's breached after that, then we get out, and that would make that at that point. Let me just pull this over. The A wave, the B wave, and the C wave here, and that's the. We can just check on that as well, taking it from that low to that high. Still the 61.8% is at that 3.2, so that's okay, so that's correct. And we'll put that back over here, and we'll see how we climb from that point. Just save that. And this is Google here. So we looked at wave 3 here and wave 4 here, and we had, this is a conservative count to the upside of 1 and 2 and 3 and 4 here, and then we're looking for wave 5. Now I thought that this may go a little bit, I thought that this would be 1 and 2 and 3 and 4 here, and then go up for 5, but for whatever reasons, this is the thing, markets top out. They don't always, once markets start falling, in a sense, they they take others with them, so they don't all finish up nicely. So with Google here, we really need to put the stop just under the 1800 here. So once again, if we put, I'll be able to do it here. So that's the 1800. That's the support there. Put it there a bit closer. That's about the best I can do. So what you need to do is the same thing we just discussed with Amazon. So the market comes down, there's going to be a bounce off it, and then it's going to come through here and sit up there. So then it goes under that level there. And if that's breached at that point, then we need to get out at that point. Okay, so if the 1800 becomes the retested resistance, then we need to be out of the trade. So the next one here is Apple. So with Apple, let me just get in a bit more data. So been counting this up here as well, 1 and 2 and 1, 2, 3, 4, 5 here. So that would make the top of the third wave over here for that. Coming back for a fourth wave here for this. I thought that this may have given us a bit more of a high here, looking at this as 1 and 2 here, and then 3 and 4 and 5 here. So it hasn't really given us much of a high in this case. We've moved the stop up here yesterday. It might be an idea to move this up again and move out. Let me just check on this here. Okay, so what we'll do is we've got to lock in some profit here. We can't let a whole balance sheet sort of come back to break even again. So we're just going to put it at this point here, and we'll see how we go with that. So that's at, really we should be under that number, but we are getting a nice bounce here. So we'll just leave it at 140 there. Apple. So we'll just put it at 140. I don't normally like putting things at whole numbers like that, but I just want to get as close as I can to this market, and we'll see how this travels here. So that's that. And Square, well, Square wasn't really doing much for us because we'd already counted all the way up here to a high, and it just seems to be in place. So we don't need to do any. We don't have a trade in the. We don't have a trade. It's in a portfolio. But 1 and 2 here, as I mentioned yesterday, 3, 4, and 5. If we get 5 waves here, then we're going to get 3 waves over here. PayPal's probably the same, and then this move down through here. So we're going to get 5 waves. Well, we don't know that. I've only got 3 waves so far, right? But if we do get 5, then we know that we're going to get a correction, and then we're going to get another 5 over here. So that could create a shorting opportunity for a couple of weeks on the short side. It may even go deeper at that point, but we're not really into that one at the moment. And Facebook here. So So we looked at this in a couple of ways. I had it as the A wave here, the B wave here, and the C wave over here. I think it was Galbraith that suggested a WXY over here. But this had always haunted me here because we had that 5-wave structure here. We've got a couple of long positions in here. We talked yesterday about taking a percentage right on this high here at 285. So hopefully you've done that, and yeah, we'll just see how this comes out. It does appear that we got 5 waves here. We did look at this yesterday as well. So we'll just go to the tick chart. This is Facebook, sorry. Okay, so we had this, here's wave 4, we counted this as wave 1 and 2 and 1 and 2, and a bit of a long story here and a long move up here for 3, 4 and 5 to the 3rd and 4th and 5th here. So we called in the top okay-ish here, taking a percentage on that high, and then now we need to look for that 50-60% retracement level here. So we took some profit here so we could have a wider stop here. That was the general idea. So we do need to keep the stop under that. So that's Facebook. So we had the stop at we adjusted the stop at 256 down here for this. So we'll just leave it there for the time being. If I had to take a guess at this here, I'm not, well, obviously that's wave A here. Let me just get this into play. A, B, and C. So I know that's the A wave. It looks corrective, and that looks corrective actually too, as in 3 waves. So maybe this is an A, B, and C here for this. I can see 5 waves in here. So we could put the B wave here. So we may be finished here for this, like that. That could be the case. If that's not the case, then we'd have to include this as wave 1 and 2 and 3 here, coming back up to the 4th here, the wave 4 of 1 lesser degree here, and then have another move down from that point. But then we don't want to go any further than that. If that was going to be 1 and 2 here and 3 here and 4 here and 5 here, then we don't want the market going any lower than that last structure coming down here, okay? So that where I've got the stop at 256, you'll be able to bring it up under this low here at that point. So yeah, that's it. Yep. Okay, so let's just recap the S&P, the Nasdaq, and the S&P. So they're pretty much on the same. This is the S&P, but the Nasdaq is the same. So just to recap, from the highs, which we think are in place, this move down here is appearing as an impulse wave, 5 waves. If that's the case, then we'll get a correction in 3 waves back to supply, or the closest largest number, 61.8% and all that, and then we'll get another 5 waves down. Now, we don't know if this 5 waves down here is part of an ABC correction, and then we head up from that point, or are we going to be going lower? So I think that we just gather evidence. So we wait for this to play out. You can short this leg here, but then we need to understand anything past this last 5-wave structure here, then we know that we're bearish at that point. Okay, that's just staying with the facts and gathering the evidence, and I think that's what we should do. So that's what we're going to do. Alrighty, sorry for such a long video. Thanks for tuning in. Cheers.